Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, September the 19th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get it on. Not a whole lot of economic data today. We did get some data here in the United States, building permits, which isn't something that I really like to look at a whole lot. It came in at 1.3 million versus the expected 1.22 million. So quite a lot of building permits being pulled. Doesn't necessarily always mean that they are going to start building. And then we also got housing starts came in at 118 million units versus the expected 117 million units, and they revised last month's number up to 119 million units from 117, so a little bit better than expected there. And then we also got importer price month over month came in at 0.6%, was expected to be 0.4%, but they did revise last month's number down 2 ticks from a positive 0.1% to a negative 0.1%, so they kind of make a wash there. Anyway, on to the overall markets. Oh, and one other thing is today is the first of two-day meeting for the FOMC tomorrow, coming out with a rate announcement, whether or not they're going to increase rates or lower rates. It is expected to be unchanged at 1.25%, and that's exactly what I expect to have. We also have inventories tomorrow, but crude oil right now giving back a little bit, trading just down 17 cents, but in that $50 a barrel area. So it's actually causing the broader markets that are oil related to start rallying, like the ConocoPhillips, XOM, things of that nature are starting to rally, because once we get into that $50 a barrel area, it makes it much easier for them in the fracking industry. They start becoming a little bit profitable right above that $50 mark. They will still frack below that number, but they are teetering on losing money. But it's cheaper to lose a little bit of money on that fracking industry when the oil is suppressed, then shut down those plants and then restart them up. It costs too much money to do that. So they run at a very minimal level and lose a little bit of money on that fracking. But now that it gets above $50 a barrel, they start making a slight profit. So that is the kind of line in the sand for the oil producers in that fracking industry. They need to be above $50 a barrel for basically it to make any kind of money whatsoever. All right, so on to gold futures. Gold futures, making a bit of a dead cat bounce here, up about 70 cents. Yesterday was a really big sell-off. It was one of the biggest sell-offs we've seen in in gold futures in the past several months. So big sell-off yesterday. Once we got below that Fibonacci level of the 78 line in the sand, market really started accelerating to the downside. Today, holding a little bit of its own, but inside day, very quiet, but it's really probably more profit-taking than anything else. Then on to the bonds. Bonds continuing to come off a little bit here today. We talked about this. It's going to want to migrate down to this value area where the point of control is. That's where the market has found value. That's where the market has put its money where its mouth is. That's where price has really been discovered and accepted. So that is where we probably should be for the FOMC minutes, our meeting for tomorrow. So I think all that stuff is kind of lining up. It's going to kind of land somewhere in here, and I even expect it to go down into the 152s, or sorry, 152s in the bonds. So keep that in mind as well. VIX continuing to come off as the market continues to make all-time historical highs, like in the Dow. NASDAQ hasn't really caught up. There's a bit of a rotation out of tech, despite the fact that we've seen a few of them make all-time highs, like NVIDIA and a few of those, Microsoft near the all-time highs. We're starting to see a little bit of a rotation out of that and into the blue chips, as we see here in the Dow Jones Industrial Average up 34 points. This is what I was talking about, new all-time historical high above the value area high as well, and blue chips are really looking good right now. NASDAQ is in positive territory, but it's just not been able to get any momentum to the upside to create that all-time high of 6,020, which is what I expect, because remember we talked about that number being printed in the overnight session, and they're going to need to print that in the day session. E-mini S&Ps 2503 up 1 point, quiet day, basically looking like an inside day for the most part, as we will see here on the 30-minute chart of the E-mini S&Ps. You can see the value area is very tight and inside yesterday's range as of this point today, but just a quiet day, not a whole lot of economic data, not a whole lot of geopolitical information coming out. North Korea hasn't fired another missile, so everybody's kind of happy right now. And on to the couple of things that I'm looking at doing here. We've got Caterpillar. Caterpillar is really outpacing to the upside, just on speculation that the economy is going to do well, and they're going to start needing builders are going to start needing to buy some of this equipment for building. So it's been outpacing to the upside. Well, Deere is still in that same space, whether it's lumber or building, things of that nature. They are really sector related to the farmers and things of that nature, but they still compete in the same space. So with Caterpillar really rallying, Deere kind of lagging, I'm looking to put on a pairs trade here. So I'm going to look to put on a short man's covered put in here. I've got a working order in there. I haven't gotten filled on it, but looking to create a short in Caterpillar while I have a long on in Deere. Deere is doing very well. I actually chased this one because it was starting to blast out. I think it's going to look to cover this gap. And earlier today I was thinking it might take a couple of days, but it looks like it could happen almost today. But with Deere, I went in there and did a poor man's covered call, and I did the January, bought the 110 calls, and then sold the January 125 calls in there, and I paid $12.63. So I think I paid up a little bit for that trade. It's very close to in line with my rules. It was kind of like I really wanted this trade. I was looking at it yesterday as well, and was kind of beating myself up that I didn't pull the trigger on it. So I just jumped in on that trade today. So in on the Deere, still waiting on the Caterpillar to, fulfill that whole pairs trade. Onto General Dynamics, they've been winding up. I talk about this a lot of times when you see the markets trading sideways, feels like a rubber band winding up really tight. So I'm really short deltas in my overall margin account, and all of these trades have been in my margin account. I haven't put anything in my or talked about anything in my IRA yet. But General Dynamics went in there and did a long call spread, bought the 195 calls, and then sold the 210 calls in there and paid $7.85. So that was a nice little trade. Hopefully we can get General Dynamics to pop a little bit and break out of this little tight range, which we're starting to do now, which is starting to look a little bit better. XLV, healthcare sector, in my IRA, put this trade in there. I didn't put this into my margin account, but in my IRA with XLV, I went in there and did the November, and I bought the 84 puts, sold the 81 puts, and paid $1.39 for that trade. So looking for that market to come off to trade right around that 181 level, which is right here where it acted as resistance before, should act as support there, and I think we'll come down and look to test that sometime here in the next week or so. Then on to ConocoPhillips. I talked about this yesterday with crude oil kind of pulling back just a little bit. I think this is about done to the upside. They are the oil is in the $50 barrel area, but right there at that 25% of my max profit on this, so it fit with my rules, and came up, tested this 38 Fibonacci level, which is what I was looking for as a target on that. And if you remember in ConocoPhillips, I did this in line with my rules and the webinar I just did on the long straddle. So I went into the November and bought the 44 straddle, which is 44 calls, 44 puts, and I originally paid $3.66. Was able to get out of that for $4.55. Now, some people might be like, why don't you ride that out a little bit more? Maybe there's more room to the upside. I don't care. It's in line with my rules. This happened rather quickly and went up and tested those strikes, which is only about a 15% probability that those will finish in the money at expiration. So I'm going to take the probabilities that have turned into my favor and get out. All right. So and I actually did already get out. So I would suggest if you followed along with that trade, it would be a pretty good time to get out. You might be able to get out of a little bit better, maybe even $4.60 right now. So all right, that's all I got for you guys today. If you can't take that, take it easy.